blockchain technology is one of the most disruptive innovation platforms evolving today. I think I've interviewed with you a number of times. So, it's robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing. So it's one of the 5 major platforms we've been focused on since the beginning of ARC. We celebrate our 10-year anniversary in January. We took our first exposure in Bitcoin when it was $250 in 2015, and we wrote a paper back then. And we knew we wanted to be involved back then. And actually, prior to that, the director of research and I at another firm had been focused on it. This is the first global, digital, private, rules-based monetary system in history. It's a very big idea. When we wrote the paper in collaboration with Art Laffer, Art Laffer, Supply Side Economics, Laffer Curve, he said, I've been waiting for this since they closed the gold window in 1971. So he's been waiting 50 years for this, right? And he's so excited about everything crypto, but especially Bitcoin, because he believes, and it is true, monetary policy around the world is unhinged. It's not hinged to anything except human decision-making. And this is going to put discipline, rigor, back into
these particular products you're talking
about. Well, Bitcoin is, the monetary system is Bitcoin. And so, yes, why now for these? We've been working with 21 shares since I met Ophelia at an ETF confab in 2018. They had really just started their business. And I said, we want to move towards crypto. You are completely crypto. They were focused on the infrastructure, the regulations, really blazing a trail. They had to invent things in order to make this happen. And we knew that was not our core competency. And so we did start talking. Our core competency is research on disruptive innovation, and they do research. They do deep technical research on the market. Our research is on the disruptive innovation that it represents. And we've just been coming together for 5 years. It was a natural for us to come together. They are, or 21 Shares is the largest crypto ETP provider in the world, $1.5 billion. They have 35 different funds, most of them in Europe, in and around Europe. They were looking for a U.S. entree, and we were looking for infrastructure, and, we're just delighted to be partnering with them, given how much groundwork they had to lay for this to happen.
Hey, Money Talkers. Today, we're diving into the crypto carnival where the market is roaring back to life, and we've got election ripples adding some extra spice. I'm your crypto navigator. Let's set sail into this wild sea of finance. Guess what, crypto legends? The market is up and Bitcoin's flexing above $37,000. Why the sudden party? Well, we're shaking off the weekend blues, and guess who brought the magic? Javier Milei winning Argentina's elections. Yep, elections influencing crypto. It's a wild world. Monday's got its mojo back, and the crypto markets are on a joyride. After a hiccup last week with the SEC and delayed ETF decisions, we're bouncing back. Bitcoin is leading the pack, gaining 2.3% in the last 12 hours. The total crypto market is flexing at $1.45 trillion in Ethereum, XRP, Solana, Cardano. They're all joining the celebration. Michael Saylor says Bitcoin is the future of Argentina's economy, giving a nod to Javier Milei's win. Argentina's inflation crisis is a real headache, and Bitcoin's supporters are cheering for it to be the superhero hedge. Bitcoin's surge is riding the waves of Argentina's elections. Who knew elections could be this electrifying for crypto? But the week has just begun. What's on the radar? FOMC minutes dropping on Tuesday, giving us a sneak peek into the Fed's plans. NVIDIA's earnings report is bringing some tech drama. Thanksgiving might slow the U.S. markets on Thursday, but Friday's a half-day comeback. Watch out for the PMI stats flashing on Friday. Will they dance above 50? And there you have it, Money Talkers. The market's on fire, elections are throwing surprises, and a week's packed with financial fireworks. Let's continue our discussion with Cathie Wood.
Something has changed. So we had put in a number of times a filing, and we were just denied. Never got any questions, really never got any response. This time, this summer, we got questions back from the SEC. Now, normally when you get questions from the SEC, you're just saying, oh my goodness. We were thrilled to get questions back because it means they're engaged now. Now, we have met a number of the research people at the SEC on the research side, and they are extremely sophisticated. They know what they're talking about, and the level of sophistication of their questions suggested, okay, now they're moving deeply into this. And we answered those questions. We have not heard back. That's a good sign too. They never tell you that you've satisfied them, but if you don't hear from them, that usually means that you have satisfied the answers to the requests. So that was new, and we also know that BlackRock got questions. We put our answers in first. I think they have followed, and I'm not sure about anyone else. That was different. And it says, okay, there's movement, and we are the first in line just because we kept refiling. Others gave up. And so, but we just kept refiling. And we became first in line. So David against Goliath, is it right? And that's January 10th is the final deadline. They've been able to push it. It's very orchestrated. Push it. But the final, they either approve or deny on January 10th. And
what do you think?
Well, again, I mentioned something has changed.
Right.
That's good. The odds have gone up. There is only one wrinkle just occurred to us in the last couple of days. They will approve a number at once. It won't be just one. That would be choosing a winner, given the way ETFs work. But we know Grayscale wants to convert to an ETF. I don't know how practical that is, or if the SEC will let them, or if they need a special dispensation. I just don't know the rules. Grayscale has said it will sue the SEC again if it denies the conversion. If they were to do that before January 10th, I don't know if that would throw everything up in the air again. I think, so if we look at the reasons that Bitcoin will scale, so our base case is today $600,000 to $650,000, and our bull case, based on the scarcity that is now developing, we're at roughly 19.5 million Bitcoin out there. There will only be 21 million ever, and we do believe that. We think that institutions, if the SEC blesses a Bitcoin ETF, institutions will feel like the coast is clear for them to pursue. And we know a lot of institutions have been researching crypto assets for a while and do agree that it is a new asset class. Bitcoin was the first in a new asset class. We wrote a paper in 2000, I think it was 16, ringing the bell for a new asset class. And our director of digital assets said to me, "Do you realize that happened today? We rang the bell for a new asset class." I said, "Oh, I didn't make that connection." Anyway, so institutions understand when there is a new asset class, it's there's an opportunity to diversify and increase returns per unit of risk. That's very important. They've also learned that Bitcoin in particular can be a hedge against both inflation and deflation. Everyone understood the inflation part of it because right now it's pretty much considered like digital gold, a hedge against inflation. But we learned something very important during the March regional bank crisis. What happened to Bitcoin then? Now, that was risk off and a deflationary vibe about it, right? Banks going bankrupt. Bitcoin went from 19,000 to almost 30,000, up 50%. What was that? That was proof of concept that it's a hedge against deflation too. What can cause deflation in a financial crisis? It's counterparty risk. You don't know what is on the books of the banks and which ones are going to go bankrupt and which ones aren't. So there's a seizing up. So, just get away from that. Move into an ecosystem where there is no counterparty risk. That is Bitcoin, completely decentralized, completely transparent, and no counterparty risk. So I think more people are beginning to understand that, sure, it's a risk-on asset, but it's also a risk-off asset. And gold has some of that, but Bitcoin has that on steroids, I would say.
Erd Houben, Director of Financial Markets for the Dutch Central Bank, DNB, has talked about the value gold could have in a financial collapse scenario. As the bank has been recently increasing its gold holdings, Houben stated that due to its properties, gold might serve as a hedge in the case of a worldwide economic disaster. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.